what I've noticed with almost every single successful entrepreneur and founder, business owner, is that yes, they've built a successful business, but along that is growing and now running without them and they can step away and that's all good. But they've also done a really nice job of investing in assets that can run alongside of their business that can continue to grow even while they sleep. And, whether that's real estate or building other businesses, there's been a lot of different things that successful business owners, all of them are doing at a certain level when they get to a certain point. And that's exactly where I want to take this conversation. I think one of the biggest opportunities right now in terms of assets is what we're going to talk about today. And I think it's one that most founders, entrepreneurs, business owners, I poll my community, I see the comments, I see people talking. Not a lot of people know what's happening with the blockchain technologies, with crypto, digital assets, whatever you want to call it. And we are going to dive into all of this today, which is why I'm excited to have Zach Lindquist, founder of Pure Crypto, on the Founder Talk podcast. Welcome to the show. How are you feeling today, Zach?
Appreciate it. Thanks for having me.
Yeah, awesome, man. Me too, man. Me too. So let's start with this. For those that are not up to date on what's happening or even what crypto is, what's the 101? Like, what do business owners need to know about what are digital assets, the blockchain technology, crypto? Break it down. I'm going to go through here because I nerd out on this stuff. I'm a personal crypto investor. I believe in the technology, as do you, and you help clients invest in this. Yeah. But a lot of people listening are like, I don't even know I don't even get Bitcoin. Like, I don't even understand it.
Yeah.
So break it down, just kind of a simple 101 level, and then we'll go from there.
Yeah. Happy to do that. You're going to get 10 different answers if you ask 10 different people what Bitcoin is. On a very basic level, to summarize the entire digital asset ecosystem, the blockchain is a technology that helps facilitate transactions. Bitcoin proved, it was the first, it proved that you could send transactions between two people peer-to-peer without a third-party intermediary stepping in between to facilitate that.
With no bank in between.
With no
That's
bank.
Right. Which is very unique when you just think about that. And I'm sorry to interrupt, but just think about if you're sending money to another person, you have to have some type of institution, bank,
yeah, it might
party,
be bank, it might be Venmo,
right? PayPal. But in this case, just me and you.
It's just you and I. It's just one wallet to one wallet. And you could think of the blockchain as this like public utility in some senses, where it's a software that's running autonomously. There's miners who are running it, being paid to facilitate these transactions, but they're not able to dictate the terms of the transactions. It's just a free, inclusive way to facilitate transactions peer-to-peer, right? And so Bitcoin is just a very basic payments platform, payments technology with a free-floating currency on that platform called Bitcoin. Everyone takes that and they extrapolate everything else in the industry to be just Bitcoin copycats. And that's where a lot of people get the whole thing wrong, right? They see a headline about some meme coin that goes up 10,000x, they don't understand. And so they dismiss the whole industry. And the best way to think about it is Bitcoin was the first. It was almost like the test case, and it's in its own lane. In my view, there's no Bitcoin competitor realistically on the market today. Everything else is trying to solve different problems, right? And at the end of the day, this is software. It's software that runs autonomously. And the software is trying to solve different pain points in the current financial infrastructure, right?
Yep.
So payments is one thing between two people, but you can take that and you can extrapolate that to create applications that can do borrow and lending. You can do exchanges. You can do basically any sort of conditional payment system. You can replace, a blockchain software product with something in the regular financial system that we know and use today. And so I think it's intimidating to try and learn about it.
It is.
There's not really a good place to go and read about it, because once you understand one token, then you go to the next and you have to rethink, because it's probably solving a different problem. It's constructed a different way.
Yeah.
So the 101 is it's basically a way of keeping track of who owns what and facilitating transactions between two people. And that technology is really powerful if you think about how the financial system works. Most of it comes down to an intermediary that stands between you and somebody you want to do business with. Mm-hmm. And they take their fees to allow that economic activity to happen. And so this is just software that's replacing businesses, which at the end of the day, that's what most technology is trying to do, is replace businesses with tech.
Right. And so what if you're a founder, business owner listening to this, and I'm sure there are going to be some right now, then I was this way probably 6 years ago, 5 years ago, where I was like, somebody talk about Bitcoin and I'd be like, or cryptocurrency. And I'd be like, that's a scam.
Right.
Like, that's like,
Right.
I don't know if I said that, but I was like, in the back of my mind, I was like, it seems kind of weird. Like, it seems like imaginary money. Like, what do you say to the founders, business owners listening right now that are like, one, I don't know if this just sounds like a scam or Ponzi scheme. And then
Yeah.
two, why do I care about this as a business owner?
I think if you're a business owner, you should care about the technology. You might not care as much about Bitcoin. Bitcoin is more solving a problem of a store of wealth. It's a commodity,
Right.
digital
It's like
commodity.
gold, digital gold, right?
Yeah, digital gold. And that might be relevant to your business. It might not. But almost every business has some sort of payments infrastructure or is digitally native in some way, right? Like not everyone's an internet company, but almost every business uses the internet in some capacity. It's the same thing with crypto, where not everyone is going to be buying Bitcoin on their balance sheet for their company, but you might need to facilitate payments in a digital way. And there's, the digital asset ecosystem, I think, provides a good and compelling product for you. So I would look into it. It kind of same with AI, right? Like, it's intimidating to get started, but once you jump in and actually understand, hey, there's some things here that could actually solve problems and solve pain points for my business.
So let's give them a real example here. If I'm a business owner, how does, blockchain or cryptocurrencies or just the digital assets world, how does this help me in my business? Payments.
Yeah.
What if you got someone saying, we already do payments now, I have a payment provider, what's the deal? Why would I change what I'm doing there?
Yeah, I mean, depending on how you do transactions, you can eliminate credit card fees in a world where we use stablecoins, and that's why stablecoins have become so popular.
Explain stablecoins, because there's a lot of people that will not know what that is.
So a stablecoin is just a digital currency that is one-to-one backed by US dollars in a bank, right? And they're issued by stablecoin issuers, the biggest in the US being Tether and Circle. Those are just basically crypto dollars, and they're meant to be for mediums of exchange, right? It's meant to be a payment mechanism. So if I buy it with something with a credit card, it's an instant transaction. Great. I don't have to sit there and wait. But I got to pay 3.5%. And usually as the business, you're putting that back on me, the customer. At least currently, that seems to be the trend.
Well, I think probably for a lot of B2B companies, it goes back to the business.
Yeah.
Probably consumer, it's probably felt on the consumer, but from a B2B company, I know for us, we absorb processing fees because we're higher ticket, we're a service-based company.
Yeah.
But consumer, you buy a coffee, you're paying that 3%, right?
Paying that 3%. Yeah. And if you follow how, like, even though it's an instant transaction, how many different points and different companies have to, touch that transaction to get it approved. And they all take their little, a cent here, a cent there, a percent here, or whatever. And by the end of it, it's 3.5% just to send money from one person to another. And stablecoins just completely obliterate that. That's why banks are going crazy about them, I think, and they'll be integrated in everyone's bank accounts probably within the next year or two, because you can send them 24/7, 365 for free.
There's no fees on those.
There's the fees are
so
small of a fraction of a penny that it doesn't show up, right? And like, there's no reason why sending $10,000 should be more expensive inherently than sending 1,000 if it's just an exchange of messages.
That's
on a ledger.
That's true, because you're not lifting any. Like, it's just
10.
Move this, right?
It's just, entry, debit here, credit here. Why does it matter whether it's 10,000 or 1,000?
Right.
But if you're paying 3.5%, you just paid, order of magnitude more money to send $10,000 or to collect 10,000. So
if I'm listening, I might be saying, what's the catch here? Because all these credit card companies are making money from the 3%, the charges, the PayPals, the Stripes, your payment processing company down the street that does all your processing. What happens to them? And then how are they not charging a fee if they're moving all this money on stable coins? If Tether or Circle or whatever, they're the owner, they're basically, creating these digital dollars, and they're backed by US physical dollars or treasuries, I think, too. How are they making money? Like, there's got to be some type of,
Yeah, there's no free lunch. Yeah, like, Visa's going to have to figure out how to make money.
Yeah.
I think, I don't know the answer exactly how Visa and MasterCard are going to adapt over time. I feel very confident that within years, maybe less than 3, sending dollars from one person to another is going to be a free economic activity or
I
close to
agree.
free. So they're going to figure out ways to make money. And, one way would be if you have money on Venmo or if you have money at a bank, they get to take your deposits and they can earn a yield on them, right? So there is money to be made if you have your dollars sitting on a platform. Those platforms can go and make money on your money. So they don't have to charge you for the transactions when they can make money if your, assets are sitting there.
Right.
So I would expect to see applications make money that way. Like like where your assets sit on this platform or on this application, whether it's a payments application, whether it's where your assets sit, like your stocks, your tokenized stocks, if that's the world we're going towards too. If it's sitting on something like Kalshi or, a prediction market or whatever sports gambling application, like everyone's going to try and make money on your money sitting there idly.
So right now, if you're my customer and you need to pay me $7,000 a month for services, whatever it might be.
Yeah.
Can we exchange through stablecoins right now, me and you? Do we just need our own wallets? What would we need to do to actually just exchange and have no fees? Basically, I'm going to cancel out my payment service provider right now, and I'm going to start using blockchain technology, currency, digital assets. Is that possible for most businesses?
It's possible, but I would say it's not yet integrated with the service providers that we're most used to using. Right. Bank accounts or things like that. I would have a wallet on my phone. You would have a wallet on your phone. You would show me a QR code, kind of similar to how a Venmo payment works, right? Yep. You show me a QR code or something and I scan it. Okay, I've got your wallet address. I'll type in $1,000. It'll scan my face, scan my thumb, whatever it is, and click send. And what's happening behind the scenes is a bunch of, crypto jargon that people don't need to understand.
Right.
Because all that matters is, hey, can this transaction happen securely? And is it auditable on the blockchain? Like, do I trust the payment platform that it's being sent on? But I think for the user, the consumer, it's more than possible today. It's easy. It's fluid. I think people, when it comes to payments, they just want it to be quick and easy. They don't want to have to sit there and wait for 2 minutes for it to settle.
Right.
They don't want it. They don't want it to be. They almost don't want it to be too easy. Yeah, a wire. If you try to send
ACH, it's like days.
Yeah, 3 days for an ACH, and then if you send a domestic wire, it's $30, and someone might call you and say, "Where's this going to?" And then you'll reply and be like, "Well, it's my money,"
Right.
And they'll say, "Well,
wherever it's going, it's my business."
Tell me about it.
Yeah.
People, I know a lot of people have had issues sending wires, especially if it gets over $10,000. They'll really hammer you on who that's going to. So I think that world's going away pretty quick.
This feels like the internet of 20 years ago, where it's like, it's here, it's starting to be put to use. There's companies building on it, but it's still so early that it's not as simple as like everyone's using stable coins in your business tomorrow. Yeah. Because it's just the friction you'd have to go through. But eventually you see like the technology clearly is so much better. Yeah. And good technology, great technology wins over time. It just does. You can't stop that train, right? It's like the internet, you can't stop it. There's some companies that were like, I'm not getting a fucking email address. Like, I'm not going to be on what's this internet? Like, I remember watching an interview. You can go back and watch it. It was like an older clip I saw on YouTube one day. And it was Bill Gates. I think he was interviewing with, he was on David Letterman's show. And David Letterman's like, he's a funny guy, whatever. He's cracking jokes. And he's like, so what is this internet thing? And, Bill Gates is trying to explain, well, it's you can broadcast different things. For example, you could listen to a game, and Dave Letterman literally looks at him and laughs at him and goes, well, have you heard of the radio? And then the crowd starts laughing, and it's like, and back then it was like, you're an idiot, dude. What's the internet? Like, there's FM radio, there's AM radio. Like, what is this thing? Yeah. And Bill Gates was having a tough time kind of describing like what it could do, because it's like so hard for people to really understand, and it was so new. And I think it's a lot of the same stuff with cryptocurrencies and blockchain technology, where it's like, you can laugh at it, guys. You can watch this and go, this is bullshit. I don't think this is real. Meanwhile, Chase Bank, BlackRock, Franklin Templeton, Fidelity, who's the recent one that just got in? Morgan Stanley. Like, guys, they're all, do your research. They're all lining up for this shit. And I know the banks were crying and they wanted to stop it because they were threatened by it. But now it's like too late and they're getting on it.
Well, Bill Gates probably had a hard time explaining the internet in terms that people who didn't understand the internet could understand. And I get that. With crypto, it's hard to explain a new technology in terms that people like with the terms of the old technology,
Right.
Like everyone's used to, you go into a bank, you send a wire, it takes 3 days to process, and then I send my money to Schwab and then I buy stocks and those then settle. And then like, that process, right? Like, and what I try to tell people is the way we interact with the financial system today, it's so dispersed and inefficient and clunky. You got your credit cards over here, you've got your brokerage accounts over here, then you've got your bank that your income's coming into.
So true, yeah.
And so when you're trying to pay your bills, you got to go, replenish your bank account from your brokerage account. So you don't want to hold too much cash because it's not earning any yield.
Right.
So you replenish your bank account from your brokerage account, and then you send your cash from your bank account to your credit card account to pay off your credit card bill. And then you go back and you're like, okay, I have too much cash. Now I'm going back to the brokerage account, put it in a money market fund.
Mm-hmm.
You got your your income comes in there. You got to go back to the brokerage. So it's like you're trying to move money between these different worlds, and each one is kind of, they're collecting fees. The transfer's clunky. It takes days. And I'm like, all of that is going to get bundled, whether it's through your bank or whether it's through your brokerage account. They're all trying to become just an everything finance app, because I should be able to just open up my phone. And this is why everyone gets excited about the idea of tokenized stocks or tokenized assets, is because then those are interchangeable with your stable coins. They're now part of the digital asset ecosystem. And so now it's all in one system.
Explain that, because that's where I was going to go next. Is like you take the stock market. There's a million different examples, guys. We can't get into all of them, but how this technology is going to transform everything. The stock market, tokenizing stocks or commodities. Explain what that is, because right now, if me and you were sitting around watching TV, boom, war breaks out somewhere in the Middle East or something, right? Like it has, and it's Friday at 9 p.m. We're not making trades on the stock market, right? We can put something in for Monday, but then who knows what's going to happen in the meantime.
Meanwhile, front run before that.
You're definitely going to get free. Yeah, they're going to jump in, obviously, and you're not going to get a great price. But with cryptocurrencies or blockchain, I can just 1 second later go on and go, I'm going to dump my Bitcoin. I'm going to buy Ethereum. I'm going to use Hyperliquid to trade oil now. And there's options, right? It's instant.
Options, futures, tokenized stocks, tokenized bonds. I mean, because when you go into a tokenized system, a token is ultimately just a contract, right? It's just a representation of, it's not, if I held a tokenized stock on my phone, it's not like my phone's going to print off some stock certificate, right? It's just a one-to-one backed representation of that asset. And the reason tokenization is so exciting is because I can now enter into a system where that is going 24/7, 365. It's now on the same wallet as my Bitcoin, as my tokenized dollars, you could tokenize sports contracts, you could tokenize real estate contracts. Like anything can be tokenized in theory. How that works is going to have to get worked out in the court system. But in a tokenized asset world, everything is like transferable, and you can custody it yourself or not. You can trade it 24/7 for this. You can borrow against your assets, and those get easily bundled into one pool of collateral, right? And so there's no reason why you can't have in one place your tokenized stocks, your tokenized bonds, your cash that's sitting in a tokenized money market, your position, your options positions, you threw some money on, a prediction market, betting on someone to win a ball game. Like all that is got a market price to it.
You can bet on literally everything now.
You can bet on everything, and that just becomes an asset, right? Like say you foresaw Rory winning the Masters. You're like, he's just dialed in. He's going to do it this year. And you bought a bunch of Rory, shares on Kalshi or Polymarket. And then he's winning in the Masters. You're like, you could sell that. You could borrow against it. You can, that's an asset in your portfolio. So everything is becoming tokenized, because then it becomes all part of one system that moves without friction. And then there's no moving from credit card to bank to brokerage. It all sits in one place. I need to pay my bill. Okay. I can choose, I can do it from my cash, my tokenized money market account, or if I want to buy something big, like I want to buy a car, the application should be able to just tell you, would you like to use your cash, or would you like me to sell down your positions, incrementally on keep your same portfolio weightings, but sell down your positions, pay taxes immediately, and then use that cash to buy your car. So and do it instantly and for close to free.
think most of what we're talking about now is kind of the technology layer of how it works. And I know people are listening probably thinking, why is it worth anything though? Why is it, if I buy Ethereum or Bitcoin or XRP or any of these tokens, how do they go up in value? Why are they worth anything at all? Like I get the technology, but I don't understand how this token could be worth something. We're going to get there next, but I want to first ask you another question on how it's being used. Smart contracts. Can you explain a little bit about that and how that might be used in business, or you buy a house, or we touched a little bit on it, but
Yeah.
how does smart contracts work and why does that matter to businesses maybe?
Yeah. Smart contracts is basically just a conditional transaction, right? Like if A happens, then execute transaction B, right? So you and I, Bitcoin showed us we can send money to and from each other without an intermediary. Well, a borrow and lend, like an institution that facilitates like a borrow and lend transaction,
Mhm.
that's more of a conditional transaction that isn't a straightforward send money from one place to another, right? And a smart contract is just basically a self-executing contract that's built into the software code.
It's almost like a vending, like very simply put, it's like a vending machine, right? You
Yes.
put something in and then automatically it comes out.
Yeah. It's like if you have these inputs,
Right.
you get this output.
Right.
And from smart contracts, you can build just about any application. You can basically replicate any financial services product or business using just a series of smart contracts.
Mm.
And so you think about Ethereum and Solana, they're called smart contract platforms. So they're a place for you to come and build your application using, you build a smart contract on Solana. Solana, the network, is going to settle your transactions for you. And it's a secure platform for doing that.
Yep.
So you can think of it like an app store.
Yeah. So AI, I think, is an interesting aspect to this too, where most people don't think about it. And I actually think this whole conversation is like, when you uncover this for the first time, it's almost like when you uncover AI and you go, whoa, and you go, whoa, it can do that. It can do this. It's going to do this. It's going to change this. And then you start opening up your mind, and now everything you see, you're like, how does AI fit into this?
Mhm.
And then you're like, how does the blockchain or crypto fit into this? It's one of those things. But in terms of AI impacting crypto and digital assets or vice versa, explain to me that. What do you think? Because everyone knows that AI agents are coming. What does that mean for blockchain and quick payments and technology and crypto? It has a big role, I think.
It does. It's really difficult to know exactly what that's going to look like because the world of AI is changing. The capabilities of what AI agents can do are changing basically every day. It from a high level, digital payments or digital transfers of value just makes sense in an agentic world, right? Because I don't think AI agents aren't going to be able to walk into a bank and send a wire. They're going to expect that if one agent is dealing with another agent, that a payment transfer can happen automatically and digitally and instantly and for low cost. Like that's just going to be how agents interact with other agents, or how agents interact with humans, is like, okay, here's how the payment transfer is going to work. So there's that piece of it. Agents, what AI is really good at is taking information and synthesizing it, analyzing it, and then putting out, an output, giving intelligence. And what crypto fundamentally is a series of databases. It's information. So you have AI that can read databases, and you have crypto, which is holding all of the financial information that AI can go and dig through and synthesize. So, for example, let's say you were a bank and you needed to audit all of the transactions that happened from all your clients, right? Like that's a back office thing that they can figure out, or they've done right now without agents. An agent can go look through your payment history or the ledger on all the payments for the bank, and it can, just like that, it can synthesize it, it can categorize it, it can show you, here's how every dollar was moved, here's how I can prove, these were done with clients who have passed KYC protocols. So AI agents, I think, are going to work well with blockchains because blockchains provide the data and AI agents provide the capability to read that data.
Agreed. So let's talk about why these things are worth anything. Why is Bitcoin worth anything? Why is Ethereum or ETH worth anything? Why is Solana or XRP worth anything? Because, if I could take you guys back 20 years or whatever it might be, and we're sitting here and you could invest in Apple, you can invest in Amazon, you can invest in Microsoft. I mean, everyone would just be dumping everything they got into these stocks, knowing that's going to be maybe a little rocky for a while, but then it's going to absolutely explode and you'll become a millionaire. Like just a zero chance it wouldn't happen if we could go back and invest in all these companies because they were building on the future of the technology that we all knew was coming. It just wasn't today. Why are these tokens worth anything? And why should people be investing in them? And I'm going to preface by saying that none of this is financial advice.
It's a really good question. And you have to separate Bitcoin from the rest of the pack.
Right.
Bitcoin is harder to answer because it is like a digital gold. It's a free floating commodity. And so you could think of Bitcoin as Bitcoin's price will go up as adoption of the network increases. So if you think that the Bitcoin network as a store of value is going to increase in terms of users and volumes over time, you're gonna expect to see the Bitcoin price go up. The other reason why Bitcoin price is likely to go up over time is because the dollar's quickly depreciating. So
that's a great point.
Again, people look at me and they'll say, "Well, I'm not here to speculate on the value of the dollar. I don't want to speculate on commodities." Great. That's Bitcoin. Put that aside, because the rest of the industry you should not treat like Bitcoin. The rest of the industry is like a software tech startup. There's cash flows.
Mm-hmm.
The cash flows come after users. You have you go product first, white paper, product, users, revenues, and the difference
by
between
users you mean what?
Real users of the applications, or in the case of Solana and Ethereum, the applications themselves are kind of the users of the network.
Mm-hmm.
And so, if Solana is processing transactions, you can track that in real time. You can track real unique users on the Solana blockchain, and you can track how the Solana token accrues value over time is a function of the Solana network usage being used. Think of it like an app store. Okay. Think of it like an app store, except for the fact that every application has to settle in your currency. Right. And so as more applications become popular, usage of those grows. The Solana token accrues value over time because it's useful in these applications, because people to process these transactions on Solana will buy Solana and stake it. And so you have to connect the revenues from these applications with the tokens themselves,
mm-hmm.
because some of them don't have a connection.
Mm.
And that's absolutely true. And that's the point of being an informed investor in this space, is sometimes you have a product over here that makes money, but where's that money? Where's that value accruing? It might accrue to the token. It might not. Right. And so there's different mechanisms to tie those two things together, but there's absolutely scams out there that have a product that they prop up as being this world-changing idea. And we also have a token. You should buy the token. We're not going to tell you how those two things connect to each other, because they don't.
I feel like you're talking about Ripple and XRP.
I won't name names. I will get.
Okay.
I have many times criticized Ripple and XRP.
The XRP.
It's a great example, though.
Yeah.
What's funny enough now is Ripple is actually trying to buy real businesses.
Right. They are buying.
And
then
come back, and you can go back later and connect the two.
Mm-hmm.
But that's the biggest thing is, does this thing make money, and does the token accrue the value of that revenue? And so what makes crypto different than a regular tech startup is these things are open source. I can see these things in real time. I can see users and on-chain revenues. And
so let's I'm going to go back to Bitcoin, because if I'm listening and I don't know that much about Bitcoin, it's something I struggle with in the beginning. It's just like, I don't get what I'm buying. What am I actually buying with Bitcoin? Like, because is it like, and it just goes up because what other people say that it should go up and they buy it?
No, I mean, I think the bet you're making when you buy Bitcoin fundamentally is I believe usage of the Bitcoin network is going to go up over time, and the dollar will go down in value over time. I think it's one of the purest ways to speculate on the destruction of the value of the US dollar. It's similar to gold in that sense, where I think most people who buy gold aren't betting that commercial usage is going to go 10x.
Right.
They're betting that it might be a safe haven. They think a war is going to break out and they want to go to that. But fundamentally, you're buying a commodity like Bitcoin or gold because you're betting on the dollar devaluing over time, which is a 99.9% certainty.
Why is the US dollar going to devalue over time?
Because they have to fundamentally keep printing more dollars to keep the financial system afloat. And if you really study Bitcoin or you study how the financial system works, you realize that it's a system of leverage where the layers keep going deeper and deeper and deeper. And as soon as the government stops printing dollars to plug a hole or to fund new spending, one firm's going to blow up, which leads to the whole system collapsing. And so I'm very bullish Bitcoin. We don't invest in Bitcoin through our fund because that's not what investors are paying us to do. But we're very fundamentally bullish on Bitcoin and excited about it. But it's a different bet. It's a macro bet.
Yeah.
Whereas I think the rest of the industry is you think of it like a venture capitalist. You're a tech startup.
What's
investor.
the utility? What's the usage?
What's the problem it's solving?
That's a great way to put it, man. Really great way to put it. And I think the same way, Bitcoin, you're investing in almost a philosophy, in the freedom to have control of your financial future, the devaluing of a dollar, kind of I don't want to say anti-system, but like your hedge against the system. Where, to your point, man, if I have $1,000 in the bank and they go and print more money or what do they call it? Buy more treasuries, basically, and inject more money into the system. They don't actually print it, but they inject it into the system digitally with banks and institutions. Essentially, they're just devaluing my $1,000.
Yeah.
And I'm not going to have any control over that. It's just my dollar's going to go down over time. Where Bitcoin is the opposite. It could go up over time and protect your wealth.
Yeah. And this is something that I think traditional advisors don't think about. They think of Bitcoin as this very speculative, volatile, just, it's like thin air to them. Mm-hmm. They're like, I'm not going to speculate on Bitcoin. It feels just like it's free floating. It's worth nothing. You got to look at the denominator. Like, if speculating on the devaluation of the dollar is one of the highest probability bets you can make in the market. So if the dollar's devaluing, what do you want to hold?
But in that case, why wouldn't they just say, well, I'll just get gold?
Gold does the same thing. It's just going to be less. You're going to get paid less over time per, I think.
Yeah, I mean, look at the charts, dude. It's from what Bitcoin has done the last 10 years. Gold has done very well last year. But if you look at the last 10 years, you look at Bitcoin, which gone from probably a couple $1,000s to 100, now it's 80, and gold's still at what, 447 or something?
Yeah.
Or something
so, if, in terms of, again, the dollar doesn't always go down every day or every week or every month, but systematically, even when in times when the dollar's seeming like it's strengthening against other fiat currencies. All the fiat currencies are going down in value,
right,
all the time. So,
what's the deal with that? Like, why can't we because we're like 30-something trillion dollars in debt. It just feels impossible that we're going to get that down to a balanced budget ever. I mean, they're just like, we'll just keep printing money, and then it's going to be the end of the fiat system. Is that what you think is coming?
I don't know. I don't think there's an easy way out of it. I think you have to print your way out mathematically.
When the interest is trillions of dollars every year, it's kind of tough to get out of that. And then the government, the military, everything becomes more bloated every year. And then you've got trillions of dollars of interest every year that you got to pay off on top.
Yeah. And theoretically, there's no limit to how much money they can print, which if you're thinking about then the value of the US dollar on the denominator, Bitcoin over US dollar, there's actually then no real limit to how high Bitcoin can go if the dollar is infinite by nature.
Mm-hmm. Now, you can't make more Bitcoin. I think that's the important thing to say here too, that there's a finite amount of Bitcoin. You can't mine more. You can't, certainly they can mine more now, but there is a cap on it to where you can't just go and make more Bitcoin. After, was it 21 million?
21 million, yeah.
And after that, it's capped, mathematically impossible. Yeah. So there's a finite, so it's like, if there was all of a sudden, they could never print any more dollars, and they actually took dollars out of the system, every dollar would become worth way more now, right?
For sure. And if you said that, like, you could prove with certainty that there's no more gold in the ground to dig up,
exactly,
I'm sure the price of gold would be more volatile probably than even Bitcoin.
Yeah,
but it would go up in a similar fashion. I think you're going to have the more scarce your asset, the better it's going to do naturally against the dollar as it devalues.
So Ethereum is another big one that I think when people think about crypto or investing, they think, at least for me, I think safe havens are like the safer bets are Bitcoin, Ethereum, Solana. I
Mhm.
think those are the three like top. Some people might argue XRP in there,
Yeah.
but past that, you get into just not that they're like nothing or they're not doing things. There's great projects out there, but they're a little bit more speculative. Like there's not as ETFs flowing in from
Yeah.
institutions. There's less broad like mass adoption, a little bit riskier, I would think. What can it explain Ethereum, how Ethereum kind of works without getting technical, but just
Yeah.
like what is Ethereum in the world of crypto? I kind of got Bitcoin, digital gold, hedge against the dollar, Solana, you said kind of the app consumer product type things. What is Ethereum?
Ethereum and Solana are the same product solving it a different way. They're both smart contract protocols. So that you could think of them like app stores, right? You build on Ethereum or you build on Solana. And then Ethereum will take care of the transaction finality, the transaction settlement on that blockchain. And so the Ethereum model, Ethereum basically is optimizing for different variables than Solana. They're both trying to tackle the same thing. They're trying to say, how can we be trustless and decentralized where people can build products and settle these transactions without fear of these transactions being manipulated or somebody hacking the network or compromising the transaction anyway. At the same time, you have to solve for scalability and transaction finality. So Solana is trying to optimize more for, increasing bandwidth, reducing latency, scaling while keeping the decentralization enough. And Ethereum starting with decentralization, then trying to scale. So they're both trying to be great at both, but they're both starting with maybe optimizing in one direction or the other. So they're competing networks, competing products. We have a view of which we like better, but the market obviously right now prices Ethereum multiples higher than Solana. It was there first. It has more liquidity. So there's a first mover advantage there.
Solana, under $100 for Solana.
Under $100 for Solana, yeah.
Yeah, that's a pretty good price.
So
Yeah.
again, if you think of them like app stores, it actually becomes a really intriguing risk reward bet because you're not just betting on one thing going mainstream. You're betting on an ecosystem where anything could go mainstream and benefit the whole thing.
So how do you invest in cryptocurrencies or digital assets? What's your guys' approach without giving financial advice, but just where do I start? I'm like, I hear this conversation. I'm like, man, I got to get involved in this shit. Like, what am I doing? I'm sitting on the sidelines. Clarity Act may pass in a few months, which is like the huge regulation bill we've all been waiting for that is just going to create even more mass adoption. The train has left the station. Where do I get started?
That's a really hard question because most people look on CoinMarketCap and they see there's 5 million coins out there. That's overwhelming. ClickX, I'm not learning about it. But you do kind of have to have an asset by asset approach because each one is using a blockchain system, but solving different problems and doing it with different technical structures. So the best thing to do if you're just not into spending an enormous amount of time or don't want to go through a professional or a fund, you could throw your money in an index and probably be fine. Like I know Bitwise
crypto index.
Yeah, the Bitwise crypto index. It's going to put you in the top 10 by market cap, and you kind of own the top of the market.
Yeah.
There's going to be ETFs. This industry is going to get cut up into ETFs every which way, right? You already have Bitcoin ETFs. You got Ethereum. You got Solana.
What's an ETF for people that don't know?
It's just a structure like it's just like an asset wrapper, right? Like I can own the whole S&P 500 by just buying one thing instead of going to each company and buying a few shares of each.
Right.
It's the same thing with crypto. Instead of having to buy a little Bitcoin, a little Ethereum, a little Solana, a little of this, a little of that, you could just buy an index, an ETF. But they're single asset ETFs too. So you could buy just Bitcoin through an ETF on Schwab. You can buy just Ethereum, Solana, the same. In the coming months, there'll be a top 10, a top 20, a top 50. I don't know, maybe even a top 100. There'll probably be a DeFi, like decentralized finance ETF that just covers financial applications. There might be a smart contract protocol bundled ETF where all the smart contract protocols are bundled. So if you don't want to do the work, index investing is probably the path. But
where do you go? Do you obviously you can call companies like you guys? You guys could help them through that, right?
we are here for those who want more targeted exposure, right? So like our thesis, our premise is we want to be invested in the best ideas, the most disruptive ideas in the industry, from seed stage all the way through liquid markets. And we
What's
want
the most risky ones you guys have or that you believe in?
I mean,
Like Suli, what would?
I don't even no, we got stuff that's way more
Really?
smaller market cap than that.
Yeah, because there's a lot of these that are going to zero.
Most of them are going to zero.
I mean, most of them, yeah.
That's the point, is like, if out of the 5 million or so, I don't know how many million there are, but 99.99% are going to zero. There's maybe only 20 to 30 that are going to be core pieces of the future. And our job and our goal is to get invested in those as early as possible, to see them coming and get invested. And so that might be something that's in the seed stage right now that doesn't even have a token. It's just a founder with an idea. We want to be invested there. It might be a token that's trading at a $50 million market cap, which is really tiny, and it's trading on some obscure exchange that's not even US based. If it's a great idea, we want to be invested there. But we do hold Solana as well. Like we will go and hold higher market cap tokens too. But we just want to put together a portfolio of, these are the most disruptive ideas, and we're going to hold them through volatility, which is painful. But we are not traders. Our edge is not in trying to sell high and rebuy low and hedge with derivatives. Some people are great at that.
Right.
And if that's the path you want to go, great. We're long-term minded. We're buy and hold. We come to this market like a venture capitalist would. Just give me the best ideas and let me hold them until the thesis plays out.
Now, how would you work with a financial advisor? Like if someone's listening, I already have a financial advisor, but they're not really doing crypto because most of them, guys, have not evolved with the damn times. Are not getting in it. They will. I promise you, your financial advisor will be talking to you about crypto and digital assets in the next 12 to 24 months. That's a guarantee.
Yeah.
But maybe now they're not. So do they partner? Is that a secondary partnership with you? Do you integrate? Like, how does that work? I'm curious.
Because we're a separate hedge fund structure, we're our own entity. You can't really integrate with like a financial services firm.
Right.
Because if assets are on their platform, they're on theirs. If they're on ours, they're on ours. We do a lot with education. I think we're open to talking with advisors on, hey, let me help you get smart on this industry so that you can talk it, so that you can understand what it is when your client says, I need some crypto. You can speak intelligently about the differences between Bitcoin and Ethereum.
Yeah. So are your clients financial advisory firms too?
Not as much. Okay. They're more high net worth individuals.
Okay. That's what I thought.
We've been working to get into the RIAs, into the advisor world, but again, they're gated by their compliance committees.
Right.
Right. And so basically up until the last year, 90% plus of RIAs or advisors have had a no-go on crypto, right? Like at best, it's a reverse solicitation thing where if the client comes to you and says that, then you can buy an ETF or you can do something, but you're not allowed to go to a client and say, hey, I think we should have a 5% or a 7% position in crypto because this is exciting innovation in tech and I understand it. Yeah. Here's why I think it fits. That hasn't come yet.
Seems wild to not have 5% of your portfolio. I mean, 5%, just 5%. Yeah. Not 50, not 75, but 5.
Well, if you listen to Rick Edelman, I don't even know.
Yeah, he's good.
Is.
Yeah.
He
that's his benchmark, right?
I mean, I think he was more than that. I think he was saying he wants to have something like, I forget what it was, 30%, 40% invested to innovation. And crypto's a piece of that.
Yeah.
Right. So,
and he's a traditional financial advisor that kind of got into digital assets, right? Yeah.
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 So
it's coming.
We're not financial advisors. We don't advise on what portfolio percentage.
Right.
But we're here to just go find what are the best ideas in this market and get you as early of exposure as we can.
And then what if someone's listening, they're like, hey, I just want to like pick up some of my own Bitcoin or ETH or Solana right now. I want to, put a few grand in or something and get in the market.
Yeah.
Well, how do they do that?
You got a lot of options. And that's a reason why we don't really invest in Bitcoin or we're not focused on Bitcoin is because you can buy it. You can buy the ETF on Schwab. You can go put money into Coinbase. You can go buy it on Venmo. You can go buy it on
Buy it on Venmo now?
PayPal,
Jeez.
Cash App,
Morgan
Robinhood,
Stanley, I guess
Morgan
now.
Stanley.
Chase will definitely have it soon.
Yeah,
you know?
you have 50 different options to buy Bitcoin.
Yeah.
And
I guess, do you think everyone's having this capability because it's some fad and going away? It's like, no, they realize they got to get in on this. The big institutions are smart. They know what's happening, and they're not going to miss out on an opportunity to make money or, lose market share.
Everyone's going to want to compete with Coinbase's.
Yeah.
I
Coinbase is now becoming like a bank, basically. Yeah.
Yeah, and they enabled crypto trading, and now I think their fees undercut Coinbase's for sure. I think they also undercut Schwab. So we'll see if Schwab then, is going to come in and undercut them. I think it's Schwab.
So 12 months from now, I log into my Chase Bank app. You think I'll be able to buy crypto?
I do.
Yeah, I think so too.
I do. I think you'll be able to, and I think your transfers will be in stablecoins. Probably.
For sure.
The Genius Act doesn't actually go into effect until January of next year.
Right.
So I think 2027 will be the year where people are opening up their finance apps that they are used to opening up and being like, wait, what is this? I can buy Bitcoin, or I'm sending you dollars and it's going in something called USDC, but at least it's now not costing me $30 to send anymore. So who cares? I don't think the customer cares.
Yeah.
Is it free and is it fast?
I don't think they care either. They just want to know that, how does it benefit me, my business, the things that I'm doing?
Yeah. So to answer your question, there's a lot of ways to buy crypto. I obviously would advise against just like not understanding what it is you're owning and going on Coinbase and just throwing some money at it. And, I know a lot of people who've done that, and it's important to know every token is very different. I mean, there's copycats for sure, but like each token is trying to solve a unique problem and it's doing it in a unique way. They're experiments at the end of the day. It's venture capital.
Yeah.
So know what you own, and don't, most people buy a token because their buddy tells them like, hey, I just bought a bunch of this. You should too. That's not an investment thesis.
Yeah.
So,
and I think it's smart. And I love how you broke it down to think about it like a business and the utility of the token. Bitcoin obviously is in its own area, but research, what does this token do? How is it being used? Who's adopting it? How many
what do the
users
revenues look like? Are the revenues going up?
Yeah, exactly.
Are they going down?
Exactly. So I don't think most people even know that. There's like, I just thought it was like a digital token that you hope goes up. It's no, things are being built on there. Like these are real businesses and technology. So,
and there's great free data like platforms where you can go and look this stuff up. And a Blockworks has like a great analytics platform where you can go and just look up like, how does Solana make revenue? Okay. How much? How much was it last year? Okay. Well, why is it down? Now you got to go do the work, because it's not going to be as simple as, they made money last month, they're going to make money again in the future.
Right.
It's a business, right? Like you're going to have strong years and down years, but you have to have a reason why you own it.
Yeah.
And fundamentally, I mean, you're betting on these revenues going up over time, and then, this asset's going to trade at a certain multiple to that revenue.
Right.
And so that's an important part to understanding what you own too.
So Zach, what about your business? You're obviously a co-founder in the business. What are your guys' plans over the next few years? Do you want to grow, scale headcount? Do you want to keep it kind of smaller, lifestyle type business? I'm curious, because we have a lot of different founders on with a lot of different goals and ambitions. But ultimately, I think a lot of us want to get to a point where things can run without us being in the weeds every single day. I'm curious what your plans are.
Yeah, we're raising a new fund this summer. It'll be our fourth fund. We've been really fortunate over the last, we've been 8.5 years.
Wow.
To just be
you were here
still
early,
around
man. That's
in
like
crypto,
baby,
right? Like if you survived the last 8 years, there's you get like a little badge of honor for there.
Yeah.
We're proud. We don't take leverage. Like we're not here to try and grow this to be, the premier crypto platform. Like we're a very specialized hedge fund product for a certain type of client who, typically can write bigger checks that into a high risk asset class like crypto.
Yep.
So, we grow slow. We've done some more formal marketing efforts. But for the most part, a lot of what we do is just trying to educate people, try to demonstrate that, these are real products. Whether you want to close your eyes and pretend like they're not coming is up to you, but they're coming, and you're not even going to know you're using a crypto product when you're using one. And so we try to, we just try to be really authentically honest with our LPs. Like, this is what you own. It's going to be volatile. There's going to be great years. There's going to be tough years. But if you think about owning Amazon stock over time, how many different 80% drawdowns did you have to stomach before you get to the point where it's at now?
Right.
So yeah, we've been around longer than any, fund of funds in the crypto industry. 8.5 years has felt like an eternity. But it's fun.
Have you seen, like, 8 years ago to where we are now? Or the conversation's been different in terms of people? I imagine they have been, in terms of just talking about crypto.
Well, the market's so different, right? Like back then, people were asking the same questions. Why does this stuff have value? Why is this an exciting technology? The answers I had to give 8 years ago were more about ideas and theories, like white papers talking about what the world could look like. It's easier now today because I'm talking about like what is happening.
Mm-hmm.
Back then I had to say like, and then revenues will come. Here's the white paper. They're going to have a product, and then the revenues will come. And here's how they're going to come. And here's how we're positioned. Mm-hmm. Today, at least I can say, no, these things have revenue. It's growing. It's trading at a 10x earnings, which is really low given its growth potential. And here's it's not trying to make crypto into this value play, but at the same time, like, hey, here's why fundamentally we believe in this application, and it's at a great price. So we want to, it's a lot easier conversation today.
Good time to get in today, you think?
I do. Things are more. 2025 was a difficult year. We didn't see a lot of the turmoil in the markets, especially because we felt like a pro-crypto Trump administration coming in would be bullish for markets. Then you get the trade war, then you get the real war, and markets didn't like it. Crypto doesn't perform. People are frustrated. We're frustrated. But you've got the Genius Act that passed. That's not going away. The Clarity Act is likely to pass. I'm hoping. It's more likely than not, I think.
Yeah.
And those two pieces of legislation, I think, are going to propel the market forward. And so we're really excited about it.
Awesome, man. Well, I appreciate you coming down and doing this podcast. I know you're in town. You don't even live here, but your wife's family here, and you're in town with your family. So I appreciate you coming in and do the podcast today. It means a lot to me, and I love this stuff. I love chatting about this stuff. Where can people connect with you, find you, learn more about what you guys do?
Yeah, I'm decently active on LinkedIn, not on Twitter. I have an account. I don't post anything. So LinkedIn's probably the best way to get a hold of me, or by email.
Yep. Cool.
So yeah,
we'll link your website and stuff if you want us to as well. Yeah. Thanks again for coming on the show. Thank you all for watching and listening, and we'll see you on the next one.
Yeah. Thanks for having me.
Thank you.